Hey, welcome back. In today's episode, I'm going to show you some rather interesting news on the latest on Bitcoin this week, also including some rather interesting developments within stablecoins, as we all know is that leading digital payment rail system that is gaining more prominence. And finally, I want to give you some rather interesting use case that I found within the real world assets tokenization space, which I think you ought to know about because we're going to be seeing an awful lot of movement in RWAs. So let's jump straight into what is happening with the Bitcoin space. Now, I'm showing you this recent tweet from this billionaire, Chamath, where he's given his breakdown on his prediction, future price prediction on Bitcoin to reach $1.14 million by the end of this cycle. And in fact, this is something similar to this famous Bitcoin power law from an Italian physicist or mathematician, which you should actually check in my channel because there is episodes where I explained what Bitcoin power law is all about. But between both of these predictions, they are both based on previous Bitcoin behaviors, previous Bitcoin halving patterns that he's been seeing, where he's made some rather interesting insights and revelation that it really helps to determine the moments where people are reassessing what is actually happening in the 3 months, 6 months, 9 months, 12 months, even 18 months post a Bitcoin halving event. And particularly where it goes beyond the third month from the previous cycle, that's where he actually witnessing some rather crazy price appreciation cycles. Just to give you a quick synopsis as to what some of those predictions were, post-halving predictions. The first halving, he's concluded that Bitcoin price returned a whopping 45.52x. The end of the second halving, 2016, is actually reached 28x. So the Bitcoin price has actually returned 28x. And by 2020, which was the third halving, it actually concluded an 8x Bitcoin price appreciation. So I would encourage you to watch this episode. It's only a few minutes worth, as you can see, where he's given his breakdown as to what he would think that the actual price prediction would look like by the end of this current cycle that we're in. Always take it as a pinch of salt because it's always based on previous past behavior. It's never an indicator. No one has a crystal ball, not even technical analyst out there to give you that price prediction on the asset price themselves. But nevertheless, it's interesting that you ought to review it. Now let's move on to the next article, which I find very interesting. And this is something that I have insinuated in quite a few of my videos around the notion of, what to do with taxation in the advent of this digital economy that we're in. Crypto, Bitcoin, other leading digital assets. It's becoming even more apparent that governments around the world, they need to do something or actually go through a complete overhaul on the taxation system because it just doesn't make sense. It's no longer palatable to expect the citizens in this digital era to continue to pay the same raft of taxation rates, whether we're talking about income tax and particularly capital gains tax. At the current 20th century style taxation regime is not acceptable. It's absolutely a disgrace. And I wouldn't be at all surprised that governments would just have to come to grips with what's going on, right? Otherwise, they're going to be losing their citizens. There's going to be tremendous movement of people if they fail to address this important issue, particularly around capital gains tax, which is what this announcement attempts to reveal, where President Trump advisor Bailey says there might be a 75% chance that the big beautiful bill, as he calls it, pretends to eliminate capital gains tax on certain Bitcoin payments. If you look under the covers, I think it just tackles on the small Bitcoin payments under $600 worth. If this is actually it gets passed in the US Senate and the US House of Representatives, well, clearly the ripple effect is going to hit on the ocean, where, as I said before, it has to open up the broader debate, a much broader debate as to how governments ought to do a complete overhaul of the tax regime on whether it's income tax, capital gains tax, wealth tax, succession tax, council tax. I can go on and on. You get my drift, right? The list is endless. So it just doesn't make sense, given that in the digital economy that we're in, that the expectation from governments is for those citizens to continue to pay those rather hefty taxation rates if governments fail to tackle this point around capital gains. Because I wouldn't be surprised if people, I'm sure they're doing it already, they'll move on to, let's say, the Middle East or even other parts of the world where they're providing more favourable, least restrictive rates of taxation to entice those wealthy individuals, particularly digital asset individuals, to settle and live in those jurisdictions, thereby enabling those countries to attract not just the capital, but even the talent and the fintech players to actually contribute into the digital economy industry. So this is a very important development in my view, because it would certainly open up that broader debate. It's just a matter of time for the developed nations particularly to play catch up on this, and perhaps sooner than we think. Now move on to this other interesting development on, it says Germany's public savings bank network Sparkassen to offer Bitcoin trading to clients. Now clients will be allowed to trade Bitcoin and Ethereum by their mobile banking app. This is just testimony as to where the wind is blowing at the moment. We are seeing a lot of financial players, banking institutions, large institutions, they're starting to now open up, waking up to the fact that they have to be involved in this digital economy, because if they don't, they'll be left out. And we need financial institutions, whether we are Bitcoin maximalist or not. We need to engage TradeFi and corporations into the digital realm, into the digital economy, because they do serve a good for society, particularly around providing financial products to generate extra yield or income based on your digital asset holdings. So on that basis, I'm all for TradeFi and banking institutions to be part of this digital realm, this digital economy that we're in, which is, there's no escape from it at the moment. So this is very important development from this announcement and article. Rather interesting. The next one is around strategies. Used to be called MicroStrategy from Michael Saylor and the team. They're now offering a derivative type of stock on the MSTR, which is now called perpetual preferred stocks. Now, rather interesting, because we know that strategy is already part of the NASDAQ stock exchange. Now the next hurdle is to be included into the S&P 500, which is, based on this article, is that I think they're close to achieving that. And when that happens, I have no doubt at all that strategy is going to be truly explosive. Not to say there aren't at the moment, but given the amount of new financial products that they're spitting out to the marketplace, we all heard about MSTR, which is their common stock. We all know about other derivative stocks, high yield stocks like MSTY, but these other perpetual preferred stocks, you can see what Michael Saylor is trying to do, is trying to churn out new financial products to continue to bring more interest and more investors into the company itself, because ultimately the key strategy behind Michael Saylor's strategies company is to continue to get hold of new money by issuing these type of preferred stocks or other type of stocks as debt issuance in order to get new capital, new investments into those stocks in order to buy more Bitcoin with it, and thereby accumulating their current amassed stash of Bitcoins. I think is well over 570,000 Bitcoin, which is the largest public company to have this amount of Bitcoin in its corporate treasury reserve. So this is just another addendum, if you like, or accolade for Michael to achieve, is to become part of this S&P 500, which is going to be truly explosive. I would perhaps advise you that you do your research and to see if investing into MicroStrategy or strategies stock could be an interesting type of investment for you, but you need to do your research. So rather interesting play there. I want to show you the latest rate of capital inflows. So this is net new inflows into the US's Bitcoin spot ETF. So there's 11 of them, as we all know. And you can see in the last week, there's been into the hundreds of millions dollars worth per day, I insist per day, of net new capital inflows into each one of these 11 US Bitcoin spot ETFs. Predominantly BlackRock, which is is always going to be the lion's share recipient of net new money into its ETF. And you can see the trend is rather clear, right? There may be the odd 1 or 2 days where there might be some capital outflows, but on the whole, it's amassing hundreds of millions worth of net new money every single day. And the scarcity factor is being felt. There's only going to be 21 million. I think 19.7 million has already been mined and bought at the moment. So every day that goes by, we're going to be seeing more capital inflows into these ETFs. And you can see that ETFs are just one entry point to invest in Bitcoin. There are other ways in which to achieve the same, either by buying the Bitcoins directly and hold it either directly on a crypto exchange, which I would advise against doing, and offload them onto cold hardware wallet storage for safekeeping in the long term under the self-custody arrangement would be my advice. So, this trend is rather bullish, and this bullish sentiment is set to continue, no doubt at all, in the days, weeks and months and years ahead. Again, another interesting view, another chart that I closely monitor every now and again. The last time I've seen this website called bitcointreasuries.com, it was a few weeks ago. Back then was around 120 public listed companies where they received announcements of Bitcoin accumulation in the corporate treasury reserve. Now it's up by 30 brand new entrants, so it's up to 150 public listed entities have Bitcoin stored in their corporate treasury reserves. So this momentum is going to continue in the foreseeable future. This is never going to stop. The train journey is going to continue to go on with the Bitcoin strategy, which is to issue stock in order to capture new capital so they can actually invest in buying new Bitcoins into their corporate treasury reserve. That is ultimately what the Bitcoin strategy is ultimately about. And you can see the successes is quite clear. If you go down the list very quickly, you've got MicroStrategy, you got Marathon, which is the leading US Bitcoin mining company. You got 21 Capital, which is headed by Jack Mallers. This is a new company, which is rather interesting because they're not just becoming a Bitcoin treasury company, but in addition to that, they're becoming a Bitcoin development company. And what do I mean by that is 21 Capital is going to be issuing financial products, which is quite unique, in that they're going to be providing the means for Bitcoin holders to use that deposited Bitcoin as collateral in order to take out a fiat loan, which is rather interesting. And I have made a couple of videos in my channel, which is all the more reason why you ought to subscribe to learn a little bit more about this financial innovation which is happening at the moment, because there is clearly that growing demand in the marketplace whereby the Bitcoin investors, they face this hodler dilemma in which they're not generating any yield as a result of holding their deposited Bitcoin holdings in their self-custody wallet, let's say. But there are financial products that are attempt to address that without having to part any of your Bitcoin holdings in order to generate yield. So I would feast your eyes on a couple of my videos in my channel, subscribe to it, and learn more about what that actually means in practice. Okay. And Metaplanet, we all know about Metaplanet. It's the leading Japanese stock that's actually followed suit and has made some rather interesting successes there. I can go on, but the list is growing by the day. Like I said, the last time I've seen this list was 3 weeks ago, and back then it was 120. Now it's grown up to 150 in a matter of a few weeks. So go figure. Now we've talked about Bitcoin. I'm going to move into stablecoins. So in the case of Hong Kong, they're moving towards stablecoin regulation, which is starting in August. So you can see they're playing catch up with the Genius Act that's been recently passed in the United States, led by Senator Cynthia Lummis. Now there's other jurisdictions, other countries that are copycatting what the US have just recently done with their Genius Act. So in the case of Hong Kong, they're doing exactly the same thing. It goes on to say that Hong Kong's Financial Secretary Paul Chan announced stablecoin legislation effective August 1st this year. This regulation is designed to provide a stable market for issuers and users. Legislation introducing clear guidelines for stablecoin issuance in Hong Kong aimed at ensuring market integrity. This move is part of broader efforts to enhance Hong Kong's role as a digital asset hub in the region. Now, this is absolutely important because I've made several catalyst announcements in many of my videos in the past that the key catalyst is the catch-up of the sovereigns, where the sovereigns are going to be competing with one another in order to invest and become the regional hub no matter where they are in the world. And particularly in the case of Bitcoin, we're going to be seeing more sovereigns adopting what the US has just recently signed off in the executive order from Trump back in January, if you recall, right? Denominating the US as a strategic Bitcoin reserve holder. Well, we're seeing many sovereigns going to be following suit. And similarly with what the US have just recently passed through the Genius Act to legislate stablecoins for private issuers backed on the US dollar, while Hong Kong, and no doubt the ripple effect is going to be felt with the rest of the jurisdictions out there in the world, they're going to be following suit. So rather interesting announcement, and it's very important because, again, I made several videos explaining what stablecoins are. For me, stablecoins are the medium of exchange, like the digital payment rail system, in order to bring in fiat wealth into the digital economy so that people can actually make payments using, let's say, the USDT Tether stablecoin for those micropayments. And the advantage of doing that is you can avoid those hefty 2.5% to 3% Visa card-like expenses. You will also avoid the need for middlemen to be involved in that transaction processing. It also takes a fraction of cost to settle, which is in stark contrast with the Visa or bank-to-bank payments, which usually take several days to settle. In the case of stablecoins, it gets instantaneously settled on chain, on the blockchain, in a matter of a few seconds. So these are the advantages. And for me, ultimately, I'm using stablecoins as that medium of exchange, not as a store of value. It's very important to understand the difference. So if you subscribe to my channel, I made a heap of videos as to what are stablecoins, what is a Bitcoin, what are the CBDCs, the central bank digital currency, which now there's several countries that I'm seeing recently that have actually banning this initiative from the central banks. So it's very important that you subscribe and learn an awful lot more about what these different type of cryptocurrencies are out there at your disposal. So please, stablecoins for me are medium exchange, not to be invested as a long store of value. For that, ultimately would be Bitcoin and maybe one or two real world asset tokenizations. Next on the list is another interesting development, which again is within the stablecoin space. If you recall, the leader in stablecoins is Tether. They are the largest private issuer of US-backed dollar stablecoins, followed by Circle, which is USDC. So we've got USDT representing Tether stablecoin, followed by Circle's USDC, and now we have a new stablecoin. Again, it's a US-backed stablecoin which is led by and created by Paxos. It's now denominated as USDG, and it says it's coming to Europe. So USDG is a fully regulated global USD stablecoin that is compliant with MiCA, which is Europe's crypto assets regulation, and is now becoming available in the EU, said Paxos. So it's rather interesting. And again, this is just opening up more healthy competition, more private issuers to be part of this stablecoin ecosystem. And because at the moment, as I said, Tether and Circle, between them, they take the majority or the lion's share of the stablecoin market at the moment. And there's going to be more entrants, more private issuing stablecoins, whether it's USDG or even other US type stablecoin coming out. So watch this space. Moving on to the area of real world asset tokenization. As I just mentioned a moment ago, what are the key segments of real world asset tokenization? Stablecoins, right? According to this rather interesting chart, you've got stablecoins, which is over $250 billion, followed by tokenized treasuries and tokenized private credit loans that are being offered now on chain. Between them, they are the predominant sectors or predominant segments in the real asset tokenization. The next stage of evolution demands even more, and investors are rampantly looking for more ways to get capital moving quickly, and investors expect more from their assets. So they're looking for returns that aren't tied to cycles. Access doesn't depend on intermediaries, which is blockchain, and assets that are composable across the DeFi ecosystem, across the decentralized finance blockchain. So one emerging example, it says here, is tokenized reinsurance, bringing some of the world's largest and illiquid industries into the fund flows of DeFi. Just a reminder what reinsurance is all about. It's a form of structured finance that helps insurers to manage large or unexpected losses. So for most investors, it's been accessible up until now, held back by outdated infrastructure, opaque processes, and high barriers to entry. Despite that, it's a whopping 784 billion plus global market cap that generates returns from both underwriting profits and investment income, with capital expected to grow a whopping $2 trillion over the next decade. So it just comes to show that in most of my videos, I've created separate podcast series in my channel on real world assets revolution, which I encourage you to watch quite extensively, and in the videos within that, because every use case or emerging use case example of real world asset tokenization is covered in that podcast series. And this is an interesting development. This is not a surprise at all as to why we are seeing reinsurance firms getting into this real world assets tokenization space, because in order to cover the underwriter's risks, and in order to get, as it says here, more access to illiquid capital or assets into the space, well, the only true vehicle to achieve that is to invest and tokenize reinsurance products on chain in order to support these insurance underwriters when they're issuing out, let's say, house insurance policy or car insurance or life insurance. There's going to be underwriting risks attached. And in order to make it broadly acceptable and available to its customers and investors, well, there's clearly a growing need to even tokenize that on chain, which is what this reinsurance, real world asset tokenization example is all about. You can clearly see that real world asset tokenization is set in motion, of which there is no stopping. So investing and doing your own research, again, refer to that podcast series of mine called Real World Assets Revolution, just to learn what are those emerging use cases that are available. And of course, subscribe to my channel in order to gain access to those videos. And then lastly, I want to leave, for me, is one of the important areas, particularly aimed at digital assets investors, because we are seeing, unfortunately, news pretty much every day where they are being targeted by criminal organizations, the scammers. Unfortunately, there is yet another example of a sad story where crypto investors have lost $2.5 billion to hacks and scams during the first half of 2025, according to this researcher, Certic. And most of the incidents in this example has happened on Ethereum network, followed by Bitcoin. So again, I made a separate podcast series called Crypto Vault, where again, every now and then I upload with new sophisticated examples of crypto scam tactics that these criminal organizations use and employ in order to entice and prey on us, digital asset investors, in order to steal our seed phrases, in order to hack and steal our hard-earned digital wealth. And I would encourage you to please watch that Crypto Vault podcast series of mine in my channel, just to learn what are the latest techniques. I have to confess, most of which are social engineering driven. These simple ways or means to reach out to digital asset investors, whether it's through emails or even a fake phone call or sending a phishing link in order to extract, as I said before, those seed phrases, which are like the keys to our crown jewels in terms of digital asset holdings for these scammers to access and thereby steal our digital wealth. You have to really be highly vigilant against these attempts of access. Or rather, you take the approach of being highly skeptical and just ignore any unknown phone calls and even those that could be potentially or perceived to be lawful contacts from your local branch or local banks. Or rather, you just simply cut off. And if you have to, use common sense. Let's say you go to a bank or even call yourself, the central bank office, and just ask them if they've actually attempted to reach out to you at the number on your mobile, just to satisfy yourself, just to confirm that the call that you felt was doubtful was in fact a legitimate phone call. You just have to adopt to common sense techniques at the end of the day, and to be highly skeptical of any form of contact, particularly from unknown parties. If you do that, you would be pretty much 95% on your way to defending yourself against these hoodlums, because there are no other way to describe these individuals and criminal organizations which have a tremendous structure behind them. A lot of people, a lot of perhaps computer science fallout that are now encouraging and employing them in order to be part of their criminal gang. So you have to be very mindful and highly vigilant as a result, because I made a couple of recent stories where, particularly at the elderly, they've been targeted most commonly in recent weeks, and as a result they've lost their entire retirement savings in crypto as a result. I don't want you to be one of those victims, so please subscribe to my channel and watch the Crypto Vault podcast series to learn more about what are those latest emerging crypto scam techniques that are being deployed at the moment. So that is all that I'd like to discuss with you today. If you enjoyed, incidentally, today's episode, please don't forget to hit the like button, to share the video to other friends and colleagues, and if you haven't done so already, to please subscribe to my channel, as I regularly publish some interesting videos such as these, anything to do with Bitcoin, blockchain technology, and the future of finance. So till next time.